So we're going to hop right into it, talking about credit unions a bit. So for the uninitiated, credit union functions basically exactly the same as a bank, except instead of being explicitly for profit, it is explicitly non-profit, and furthermore it is member owned. I think in most cases. Here's a quick breakdown of what it is. A bank is a for-profit institution, while a credit union is a not-for-profit member-owned cooperative. Banks are owned by shareholders who expect to earn dividends, while credit unions are owned by their members who have a say in how the institution operates. Both offer similar services like checking and savings accounts, but credit unions often offer lower fees and higher interest rates on savings and lower loan rates. So basically, it's a bank that is designed to work for the members of the bank and not designed to work for the bankers. Because theoretically, right, a bank is a business. A bank is designed to work for the bankers, those on top who are trying to make money from the equation. While in theory, a credit union takes any of those like benefits or profits that would have just gone straight to the top of the pyramid, and they spread it out amongst all the owner customer. They're kind of both, um, to make fees cheaper, to make it just a better experience for everybody. This seems like just a great thing, and a very lower class worker oriented policy. Because I would imagine if you're rich, you really don't care too much. You don't really care too much about where your money is if it's sitting in a bank or a credit union. It doesn't really matter too much to you if it's making 3% interest just sitting there or 4.5% interest. You're rich, so it doesn't really matter. But if you're poor or you're on the lower on the socioeconomic ladder, it becomes more impactful to you. And so my understanding is that credit unions are tax exempt while banks are not. And I don't know exactly how that tax exempt status works. I don't know if it works exactly the same as like a church or something. And I think maybe it does, in which case all the assets are tax exempt. They wouldn't have to pay certain taxes. But anyways, my understanding is that the tax exempt status of credit unions is set to expire in 2026, and that if that it doesn't, um, credit unions have become kind of big since the tax exempt status for them was put into place, and so it would be it'd be a pretty big deal if they just let the tax exempt status expire, and then uh, credit unions have to play on the same playing field as banks, which it doesn't mean that they won't be viable. It just means that, like, I guess the idea is that if a credit union is more for the people, then you want to give them a slight advantage or give them a special benefit when banks are theoretically for the bankers. But hopefully this article gives us a bit more information. For nearly 90 years, credit unions across the country have enjoyed tax-exempt status as nonprofit organizations, but that could change soon as Congress considers removing the tax exemption for credit unions to make cuts to the federal budget as part of a new tax reform legislation. For smaller credit unions and even credit unions of our size too, it would make a significant impact on how we do business, said Michael Kim, the CEO of Eagle Community Credit Union. Kim said because of the tax exempt status of credit unions, they are able to provide products that are especially important to underserved communities. Exactly what I was saying. It serves theoretically, it serves those lower on the socioeconomic ladder better than a traditional bank would. We provide very similar products and services as a traditional bank, he said. But unlike a bank that has shareholders and investors, our member owners are the owners of the credit union, and everything we earn in terms of profits or earnings goes back into our credit union. And they see that in the form of lower rates in loan products, higher rates in our deposit products. It's weird how they put the word products. I'm sure that's just a relic or a token of the industry that they're in, but it's from a consumer outside perspective. It's weird for them to call lower rates in loan products, higher rates in our deposit products. When they say products, they're just meaning like the service they're offering, the ability to deposit money and store it there. A recent study conducted by American University along with the Inter-Industry Economic Research Fund showed that on average, credit unions are able to offer savings accounts with 66% higher interest rates than traditional banks and real estate loans with interest rates that are 7% lower than traditional banks on average. If our credit union tax exempt status goes away, that would be devastating to the industry, said Stephanie Cuvas, a spokesman for the California Credit Union League. Right now, we have a model where there's for-profit banks and not-for-profit credit unions. That creates competition. Take away the tax exemption, now credit unions are saying, how are we going to balance our books? Michael Kim said that some credit unions could be driven out of business if forced to pay a 21% federal income tax rate. They'd be forced to determine whether to lay off employees or change its members' higher rates or both. So this is a good point. It's it's not like I feel like they're slightly obfuscating the point here a little bit because yeah, of course, he's saying like how are we going to balance our books? But like that sort of statement implies that like the credit union is just going to completely go defunct. It's going to go belly up and that it cannot function at all within a non-tax exempt environment. But my understanding would be, or I would speculate that most of the credit unions would still be able to survive, but they would definitely have to do some sort of restructuring. And I guess that's what that's what, if they were being straightforward and honest, they would be saying was they'd say, oh, we're going to have to do some sort of restructuring as a result of this. But they're obviously going to try and play it up and say, how are we going to balance our books? Like it's going to completely kill the industry. The House Ways and Means Committee is scheduled to discuss the tax-exempt status of credit unions at a meeting on May 12th. Okay, so wasn't a whole lot in that article. Let's see if this other one has a bit more information. This is from the taxpayers. So this article is against. This article is for removing the tax-exempt status of credit unions. It's got a very Orwellian name, this organization, Taxpayers Protection Alliance. When I see a title like that, I immediately am skeptical of whether they're actually advocating for the taxpayers, the average man, or whether they're, this is just an Orwellian sort of naming front to disguise what they're actually doing. Um, I have not read this article yet, so I'm wondering how coherent of an argument they're going to place forward. Because I'm trying to let me try and what's the saying? I go to where the puck is going to be, not where the puck is. If I'm going to try and speculate on what would be a good argument against them? I guess that it's unfair to banks, right? That you're giving credit unions a leg up against banks. But like, if you think about that for 5 seconds within the context of who banks serve and who credit unions serve, then you'd realize, well, actually, hold on. Um, I'm not Why would you care about trying to make a level playing field between banks and credit unions? Credit unions are the ones that are serving the people that you want to be addressing the most with legislation. That's the only argument I could think of was just like some brainless fairness based argument that it's unfair to banks or that it's too generous to credit unions or something. I don't know. Let's see what it has to say. As Congress moves towards extending the expired provisions of the Tax Cuts and Jobs Act, there are many opportunities to simplify the tax code even further. Policymakers ought to create a tax code characterized by equal treatment for businesses. Removing a special exemption for federal credit unions is one way to further simplify how the tax code treats financial institutions. Ending this tax exempt status for federal credit unions would help to reduce the deficit. It would help to reduce the deficit. Just because they're going to receive more tax revenue? But the amount would be so minor. This is a silly point. You're really going to argue that it's going to decrease the deficit I would imagine by less than 1%. We're talking by I mean, obviously every bit counts, but like, really, that's going to be the point you're leading out with? That's weak. President Trump has voiced support for certain provisions that would do just that. Unfortunately, this resulted in his endorsement for the removal of the so-called carried interest loophole for investment managers. Critics of the carried interest exemption have cited the amount of revenue that would be generated if it was removed. However, this provision of tax law is essential for investment managers to reinvest funds into the economy and foster innovation and growth. I personally don't know enough about the carried interest loophole to fully to sit on one side or the other. I just don't know enough about it. I need to do a more specific deep dive into the carried interest loophole and see if removing it really does make sense. My gut would tell me probably, but I have a feeling it's one of those things where it's a little bit more complicated than it may seem on the surface. That like the overall effect of removing it may be good, but that there are some small potential negatives that need to be accounted for. Removing the carried interest exemption would generate $6.5 billion against the deficit over a 10-year period. How are they calculating this? Are they calculating this based on how much business credit unions currently do? Because of course, if you removed their tax exempt status, then the whole credit union industry would go down to some degree, right? People would use it less. The value proposition of using a credit union versus a bank would be reduced. So I would imagine that you couldn't use a projection of what they're doing now to say it would be exactly the same 10 years from now if you removed the tax exempt status. I would imagine that the amount of business that credit unions are doing would necessarily go down if you removed their tax exempt status, which means that if this $6.5 billion figure is based off of what the amount of business they're doing now, I would imagine it would be even less than that if this scenario actually played out 10 years down the line. On the other hand, ending the tax-exempt status for credit unions would generate up to $30 billion in additional revenue over the same period. Okay, I misunderstood. So I misread it. They're referring to removing the carried interest loophole that would generate $6.5 billion. But this is claiming that removing the tax-exempt status of credit unions would generate $30 billion. But the point I just made about that is the same point. It's that how are they calculating this 30 billion? I would imagine that it would be if they're going off of how much business credit unions are currently doing now, I would imagine it would reduce if they removed the tax exempt status. Instead of repealing a part of the tax code that is good for investment and growth, lawmakers can contribute to equity in the tax code. Instead of repealing a part of the tax code that is good for investment and growth, so they're saying that the carried interest loophole is good for investment and growth, lawmakers can contribute to equity in the tax code. Equity in the tax code. Equity for who? I think what they mean is equality. I think they're using the word equity wrong. Because equity is equality when you take into account the different starting points and the different axioms of whatever it is that you're trying to equal about. Where's the classic? Hold on. See, this is a great visual representation of the concept of equity versus equality. Equality is just a baseline. We're going to provide the same sort of rules regardless of the different circumstances of who those rules apply to. But equity is not only trying to create a level playing field, but doing so in such a way that acknowledges the different starting points, the different axioms, the different whatevers of whoever it is and whatever it is that you're trying to create a more equal system around. So for them to argue that removing the tax exempt status of credit unions would be equitable instead of quality based is ridiculous. It's clearly would contribute to equality in the tax code. It would create a base level playing field between the two, but it is certainly not equity. It is certainly not equitable to do that. Certainly not. That is a really facetious use of the word equity in this article. I'm going to be completely honest with you. I think whoever wrote this article knows damn well that what they're talking about is not equity. It is equality, and they are obfuscating on purpose. Plus, if permanently extending the TCJA is the aim of lawmakers, this is a common sense, cost-effective way to offset the associated costs. As credit unions have become more successful, they have acquired a large amount of other banking institutions in recent years who are subject to income taxes and income reporting requirements. Credit unions have also increasingly purchased community banks, which are essential to consumers and small business owners. Competitive landscape for community banks allows for personalized and local services. Credit unions absorbing community banks under their tax-exempt status removes those services. Leveling and playing... Wait, how does it remove the services? If a credit union absorbs the bank, a credit union is still essentially a bank, right? It provides almost all the exact same services a traditional bank would to a consumer. How could they possibly argue that credit union absorbing a bank removes available services for the people in the community. I would think it would be almost entirely neutral and in fact potentially beneficial because you'd be removing a for-profit bank and putting in place a not-for-profit credit union that theoretically is going to pass off the savings on to the consumers, to the co-owners. That doesn't make any sense. Credit unions absorbing community banks under their tax exempt status removes those services. It removes the service in the sense that it removes a service that you are able to make money off of, but it provides the exact same service just at a better, less predatory rate. Leveling the playing field between these credit unions and the banks they have absorbed would be beneficial for all taxpayers. All financial actors deserve equal regulatory treatment, and carve outs that favor one business over another should be eliminated. The status quo does not serve the objective of transparency. Federal credit unions do not have to file a 990 form, but state credit unions do. Additionally, federal credit unions argue that their purpose is to serve low-income communities. However, without a requirement to report on this mission or collect data, there is no evidence that they are achieving that objective. If the goal of this administration is to increase transparency, eliminating the tax exempt status for federal credit unions is just one way to achieve this. Tax reform should be focused on the creation and maintenance of a simple and equitable tax code. What is the benefit of something being simple? And we it's not we are it's 2025. We have the ability to handle complex systems. Financial institutions and consumers benefit from tax fairness. No, not in this not in this circumstance. They would materially be harmed. There's no reason to treat federal credit unions differently from other similarly situated institutions. Regulatory distortion should be eliminated and competition allowed flourish freely. Removing the tax exempt status from credit unions is one way for lawmakers to continue to create beneficial reform and support all taxpayers. This is such a facetious argument. They are doing the classic, we're going to make the argument that's best for us, for the bankers, for the people that are funding whatever this is. Um, but we're going to pretend like it's the best thing for you. We're going to pretend like it's really what's best for the consumer when really it's what's best for us. We're just going to lie to you. You don't know any better. You're stupid. These people think you're stupid because this article was written by somebody who's so much smarter than the points they're making. I guarantee you whoever wrote this knows that much of what they wrote is facetious and wrong, straight up wrong.